Hi again, everyone. Sebastian from SP Solutions, business advisory accounting firm in Campbellfield and Fairfield, specialising in trades. So, guys, I just wanted to recap what we did yesterday very, very quickly, or it may have been earlier today. I'm not sure how the guys at the associations are going to release them. So, just to highlight again the ones that we went through in terms of federal and state government initiatives. So we went through the boosting of the cash flow for employers, which was around the BASs. Again, I highlight, maybe speak to someone, whether that be your accountant, your bookkeeper, but someone who is going to assist you in claiming everything you're entitled to. One thing that I forgot to mention yesterday that I will make note of is it's supposed to happen automatically. So what we're hearing is the ATO have effectively put off BAS lodgements until April 28 for the March quarter. Reason being is they're building out the capability within the system from an ATO perspective to effectively just apply it against the BAS, right? Or the integrated client account balance, right? So we're being told that it should just be whatever numbers in there, in the month of March, should be times by 300%, and that'll be credited against your BAS, right? So just keep an eye on that and make sure you get the right advice. The loan subsidy, again, up to 250, doesn't have to be 250, can be 100, 150. As I said last time, just make sure, or our preference, I should say, is that basically you grab it, you put it in an account, and you break glass in case of emergency, right? Purely because we just don't know how long this thing could go for. If there's a relapse, or things could turn pretty quickly. The other one was the stat demands with the builders. Didn't want to scare anyone when I explained it, but I felt I needed to, and that's one that I know the majority of you guys, unless someone's telling you, you might not even look at it, right? And you might not even know it exists, but hopefully now everyone does, right? And if you want to go do a bit more reading, I'd probably encourage you to do that. Okay, so we'll get on to some new ones today. Again, I'll keep them short and sharp. Some may be relevant, some might not be. Basically, this next one is about temporary relief for financially distressed businesses. So I'll just quickly take you through, similar to what we spoke about with the stat demand, right? So the normal state of affairs with this one is there's a section in the Corporations Act, section 588G. And not that any of you are going to care, all right, we'll go looking it up. But basically what that says is if you trade insolvent, meaning you can't meet current and future debts, and that's the case, and you're a director, if found to be guilty of section 588G and trading insolvent, you as a director can become personally liable, or will become personally liable, for all the debts of the company. So all the asset protection measures that you've probably hopefully set up through your accountants or lawyers in the past, they can see right through that, right, under the Corporations Act. So what they've said is they're going to effectively turn a bit of a blind eye to this for the next 6 months. Now, I'm not sure how they're going to police it, because they do actually say that, if fraud or if fraud is found, then this 6-month rule will be overlooked, right? So I'm just not sure how that's going to be policed. It's going to be very difficult with how bad things might get for some businesses to know whether or not it was fraud or it was genuine, right? So, so I just wanted to highlight that one again. Hopefully no one feels that, right? But again, I come back to the example yesterday with builders, right? They're the ones that worry me for all of you guys listening, right? If you do work for builders, you need to go and basically just get some advice around both of these in terms of insolvency and statutory demands. Bankruptcy proceedings. So there's a threshold to initiate bankruptcy proceedings against the debtor Basically, it's going to increase for 6 months from 5,000 to 20,000. I'm not going to spend long on that. If you want to go read up on that one, you can. Certain corps laws, the same thing. Modifying certain obligations to enable compliance. So basically what they're saying is they're going to relax a few more of the rules on top of that section 58HE insolvency one, and basically make them more lax and more flexible and more agile for the next 6 months to get people through, right? Because otherwise there's going to be a lot of people that will be found guilty and not having done it, purposely. And never been a bad egg in the past from an ASIC perspective. Superannuation. So, okay, what they're saying here is we've got the opportunity to access up to 10 grand out of our superannuation, right? So, just want to make it clear. So they're saying potentially 10 grand now and 10 grand in the 2021 financial year, right? So you could be doing a June, July 10-10, right? The only thing I'll mention with this is I'm not a huge fan. We as a firm generally aren't. And in general, the majority of public practitioners, through whether it be the CA or CPA, we're not big fans of this, right? Reason being, a $10,000 withdrawal now, even though they're allowing you to do it, that 10 grand using compounding interest and market increases, just letting time do its thing. There's estimates out there at the moment. Now, I'm going to be honest, I haven't sat down and actually calculated it myself, but I've read plenty of articles where they've basically said that 10 grand, by the time someone reaches retirement age, if at the moment, they're in their mid to late 20s or 20s to 30s, could be worth 100 grand at that point. So I would encourage all of you, again, get the right advice, speak to the right people, and see how many of these other ones you can utilize in your business before you start touching superannuation funds, right? Because even though now's a crisis, when you're getting to, touch wood, we get to 65. And that's going to probably get longer as time goes by. So by the time I'm 65, it could be 70 years old, right? But at that point in time, the money's going to mean a hell of a lot to you, right? So I'd encourage you all to, again, get the right advice before implementing this one. I'll go through asset write-offs now. Basically, what they're saying is it's going to be 100% write-off for assets up to 150K, right? So for guys that have been in business a while, this started many moons ago, I reckon 8, 9, 10 years ago, where they brought out the original $1,000 immediate deduction for businesses turning over less than $2 million. And then it's morphed into a 20 grand version, a 30 grand version. And now, again, I don't think we'll see this again, but they've basically said, we need anyone to spend money in business. If you're prepared to either finance or stump up the cash for an asset that you're going to use in your business, and you can have it installed and ready for use by the 30th of June, we'll give you a $150,000 tax deduction, right? Now, if we say if we keep it nice and simple, if we take 150K and we times it by 27.5, which would be the standard tax rate out there with a lot of you guys, right? We're talking about 40 grand. So what we're saying is you spend the money. Let's say you buy, I don't know, an excavator, a bobby, some other piece of equipment you need. If you pay 149,999 ex GST, and the key there is to understand it's 150 or less ex GST, basically you'll get 40 grand back when you do your tax returns. Now, whether you actually get that back straight away, whether the loss gets quarantined moving forward, so basically means used at a later date when you do make a profit, it'll be there, right? So you get a 40 grand hit straight up, which means effectively, if we want to think about it in simple terms, 150 grand asset after the tax deduction at 27.5%, the asset's going to cost you 110, right? Which is important, right? Which is very important to note. That's the whole thing written off at 27.5, 41 grand, right? The other way that they've, and that specifically excludes motor vehicles. So I just want to make it clear, had a client ring me middle of last week who wants to go and buy some souped up ute. I can't remember which one. And it was going to cost about 130K. And I said to him, that's fine. You can go for it. That's like the business can afford it. We're okay. But if you're thinking that you're going to get this asset write-off, yes, you'll get it, but you'll only get it up to the normal depreciation limit they use for cars, right? Which is this year, I don't know, I haven't looked at it, guys. It's going to be 58, 59, 60 grand ex-GST, right? And that's all you get. The other, any more you spend on top of that for the car, similar to normal rules, regardless of this new rule, we're not going to be giving you any more depreciation on top of that limit of 60 grand. Right. So the other, you want to spend 150, the other 90 is not depreciable. Right. Anything over 150 grand, for example, like a truck and, a Scania or a Hino, whatever. Right. And it's $180,000, $200,000, $250,000 machine. You'll basically get 50% of that upfront as an immediate deduction, and you'll get the other 50% depreciated as per normal rules, right? So again, you buy a $200,000 machine, $100,000 of that is depreciable now, and the other 100 moving forward, right? This is for business, all businesses under or that are turning over less than 500, less than 500 million, right? So if you turn over less than half a billion, you are eligible. Right. Again, can be financed or cash, but again, speak to the right person that you've got the relationship with. Okay. This is a big one. I'm going to try and get through this as quick as I can, but I want you guys to all understand the landscape we're in. So we all love BASs, whether you lodge your withholding tax monthly or quarterly. When they say we're all in this together, they've legitimately meant it, right? So the ATO have basically afforded the majority of our clients, where we've rung them and renegotiated the terms of an existing payment arrangement, for example, they've effectively given us, for almost every client, to be honest, 2 years to pay back the debt, right? The majority of them we've been able to get through interest-free till Christmas, right? And then standard ATO interest will apply after that, which is normally, I don't know, these days, between 8.5% and 10.5%. But they're going to give us 2 years. So for a client who's got a debt of, let's say it's the March BAS, it was a 60 grand bill, like we said in the first session, and you got 50 off, right? Actually, let's say it's 100 grand BAS and we got 50 off. There's 50 grand still remaining to be paid on that BAS. What we're saying is there's no reason at the moment why we can't go and get a payment arrangement for, say, $2,000 a month over the next 2 years, right? And I'd actually encourage people to think of that as an option. Normally, obviously, we're not massive supporters of arrangements, but having a lot of construction businesses that, over $2 million that are on an accrual, $10 million, that are on an accrual system for BASs, they don't pay GST when the money comes in. They pay GST when they invoice, and they could be waiting a while for their cash, right? Which then lends itself to payment arrangements and chasing your tail a little bit in terms of the tax components of your business, right? That applies to both BASs and or income tax. So if you've lodged your tax return and your accountant's told you you don't owe it until the 15th of May, as many do, again, you'd probably want to get that on an arrangement as well. The only other thing to mention here is PAYG installments. So if you're a company and you're making money and you have for a couple of years, you'll be paying PAYG installments, either through your BAS if you're a company, or potentially individually if you're a sole trader or operating through a discretionary trust, right? And you might get those installments in a company name, or you might get them in your individual names. What they've basically said is, and this is going to be a deferral, guys, right? So we're not going to get this one for free. they're helping us out in terms of, if we have paid $5,000 in September of a PAYG installment income tax, $5,000 in the December quarter, you've basically given the ATO $10,000, and the March BAS has come in and it says we owe another $5,000. What they're saying is, irrespective of whether you're going to owe that money down the road, say May 2021, you can request and ask for your $10,000 back from September and December and vary March to zero and not pay, right? Which basically buys you $15,000 for the now, right? However, if up till March you are having a cracking year and it's not too bad in the June quarter because you haven't been closed down, you can still request the money back. But when you go do your tax returns in whenever, September through to May next year, basically you're going to have to pay, if the bill that the accountant comes at you with is, let's just call it $30,000. We finish your taxes and it's $30,000. It's a $30,000 bill. Basically what they're saying is you've got, you still owe the full 30 because you took your 15 back in those first 3 quarters. If that 15 had sat there and we paid 5 in June, we'd have a $20,000 credit, 30 less 20, your tax bill, whenever you see your accountant's $10,000, right? So this is purely a deferral. Read up about it. I'd encourage you to. However, again, like I said, with the government subsidy, the $250K loan from the bank, with these, we're saying to our clients, you know what, while they're giving them to us, we'd actually recommend or prefer you to ask for the money back because, again, of the uncertainty in the market in terms of how long this thing's going to last and restrictions and all this type of stuff, lockdowns. Again, put it in a separate account, call it tax, and do not touch it. Be disciplined. Don't touch it unless you absolutely need to. But the reason we're asking our clients to get it now is because we just don't know how long this will last in terms of them being so generous, right? So just keep that in mind. Apprentices, I might come to that one in the next session, guys. Payroll tax. So we'll just go quickly through payroll tax. So if you pay payroll tax to the SRO because you're over the threshold and your business has a payroll of less than $3 million that you report to the SRO, then you are entitled to a full refund of all payroll tax you have paid. And basically, so long as we apply, it's coming back automatically, right? And very quickly, because to be completely transparent, we applied for it as a business, say 3 days in, and I believe it was Monday last week where our accountant internally sent myself and my business partner Sam an email saying the money's gone back into the account. So anything up till that you have paid, you get back, and anything from here till the end of the year, if you're a quarterly or monthly payer, you have to continue to report normal. However, you don't have to make payment, right? The only other thing to mention as well is if you're an annual payer of payroll tax and you only pay at the end of the year when you do your reconciliation in July, you're going to have to do the reconciliation, but you won't have any payroll tax to pay, right? Again, have a read on their website about that. The other one is the payroll tax deferral, which is basically for the first 3 months of next year. So fully refunded and no payment due on any payroll tax to the end of June 2020. It's basically a payroll tax for a year. From the 1st of July moving forward for that first quarter, July 20 through to September 20, you have to report, and yes, you have to pay, but you can defer it until the start of 2021, being January 21, right? We will go through this quickly. The commercial tenants rent relief. Actually, guys, I might do that in the next session. We might cover that with the JobKeeper one because they're the two that only just happened. Anything else I want to quickly? Land tax. Land tax payments are going to be deferred for eligible small businesses. I'd encourage you to do a bit of reading on that because it's a bit of a tricky one to try and explain. The government supplier invoices. So if you do any work for I'm assuming local council's involved here as well. So local council, state level or federal level, they're saying if you issue us an invoice, we're going to pay you within 5 days, which is nice, right? There's a business support fund as well with through the state government. Again, Business Victoria, go and have a read. Can't really explain that one over the phone. But there's basically grants there of up to 10 grand if you're eligible, right? And that's cash as a grant. We'll leave it at that for this session. Again, they asked me to do 15 minutes. I've gone to 20, so I apologize. But I will catch you all in the next session. Thanks for listening again. Thanks, guys.